And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. My name is John Hoagland. Thanks for trusting me with your time. Happy Thursday, April the 20th, also known as 420 to all you stoners out there, as we kind of work our way through this chapter of this year's markets. The plot always seems to thicken, and it certainly seems to be thickening this morning. We are always seeking to find accurate context, thinking about risk management, and staying patient in our trading. Lots of talking Feds today, lots of economic numbers, some of them already out. Jobless claims, they were looking for 240 initial jobless claims, came out 245,000. Continuing jobless claims also higher. They were looking for 1,820,000, that came out 1,865,000. The April Philly Fed manufacturing number, I think it's about the 8th manufacturing number from Philadelphia that has come out negative. Last month, it was minus 23.2. They were looking for minus 19.2. Came out a whopping minus 31.3. Philadelphia Fed area there certainly seems to be slowing as far as manufacturing is concerned. And we got to be thinking about whether that makes the Fed happy or sad. What's good news? What's bad news these days? It's difficult to know. We're also still waiting at 9 o'clock Central Time for existing home sales, leading indicators, or as we used to say on the trading floor, misleading indicators. Those are again both at 9 o'clock Central and 9:30. The nat gas numbers due out. A lot of talking Feds. Also, we have Waller at 11 Central, Meester at 11:20, Logan at 2, Bowman at 2, Bostic at 4, and another one later on in the evening. So a lot of chatter going on by these talking Feds here within 2 weeks of the FOMC meeting. So we've got the stock index futures heading to the downside this morning, looking to the dark side as nagging concerns for an impending recession resurface as mixed earnings, many weaker than expected or hoped for, continue. Yesterday with Tesla missing, there's one. This morning, we've got a few majors that have had mixed results. Philip Morris, AT&T, American Express, Fifth Third Bank, all of those with mixed results this morning. We have two railroads today. Union Pacific today beat on both, and we have CSX after the close. And also already out this morning, beating on both is Blackstone, of course, and Marsh McLennan. Both of those are pretty heavily invested in commercial real estate. I'm kind of happy to see that they're still doing well with commercial real estate facing the condition that it's kind of in. It's been a concern of mine and a concern of many for a long time. So I'm glad to see that they are still holding up, at least for now. Crude prices are following recession concerns to the downside, falling to the lowest level since that OPEC Plus cut production, or said they were cutting production over the weekend. Looks like we may be heading towards closing that gap. It's going to be another interesting trading day, right? Each day is like a page. Each week is like a chapter. Each year is like a book. We're just filling up those pages. And again, as we get further into the week, it always feels to me like the plot thickens and things become a little bit more clear. Mondays, maybe not so much, but by Tuesday, Wednesday, Thursday, things seem to be a little bit more clear as far as maybe some opportunities. And of course, it all depends on context. The last time I looked, the VIX was up about 6.5% at 1752, where it was 1735 yesterday at this time. The dollar index taking it on the chin this morning, now down. Last I checked at 101.89, where it was 102 at this time yesterday. And the yield on the 10-year also looking a little bit lower now at 3.54%, 3.63% yesterday at this time. Welcome. Glad to see everybody here. We have the rooster crowing early. First one in the room, rooster winning the prize. Scott saw and he conquered. Shaw, good morning. Lacey says good morning to everybody. Jason, Dan Trader, Bear goes long. She hasn't told us what she prefers. At being the center of the universe, I believe she has spoken us telepathically. So we spell it Lacie, Lacy, whatever. I don't think she cares. Rooster, yeah, she can't spell her name. Good morning, Dan Trader. Good morning, my brother Rick Randolph. Always a pleasure to see you. Love you, buddy. Dimitar, Pete, Alejandro, Bill, Bear goes long. Just having a little fun here. Travis, good morning. Anissa, Sarah Hall, prayers and love to you. Ashraf, good morning. That shirt is the biggest mixed signal I think I've seen this week. Yeah, well, I do have the rally sweater, but my chair is wearing it today. Not sure what's going to go on. If we get in trouble, maybe I'll put it on later. Shy, good morning, Stephen. Dr. VJ Alfred, JT, good morning to you and Bluebell. Haggle Matters, Rusty, Golfer, Andy Bleed, Dennis, and Don Clements today, right after the prep. Make Coke money. Had a good trade yesterday, sold against the highs and had a pretty decent pullback back to the center of the range yesterday. So that was a good one. Thank you all for that. And I look forward to seeing what you've got for me this morning. We are going to head relatively quickly into the charts. Oh, one more thing. Today is Thursday at 3 o'clock. We are going to be able to see the CEO and founder of Top Step, Michael Patak, and our good friend Dan Hodgman. We don't get to see much anymore. And you're going to be able to ask questions. You're going to be able to see that today. So make sure you are ready in your seat, having a beer, and thinking about any questions you want to ask. We're looking forward to having you all there. Maybe it should be a Department of Corrections, right? It looks kind of like one of those orange jumpsuits, right? Brett, what happens when you over leverage and over trade? That's what happened to me this morning. Gave back all my great profits and nearly blew my funded account. Brett, don't do that. And when you over leverage on purpose, take your time adding contracts. You know, I think you should get used to your strategy and your process, trading one or two contracts ad nauseum until you can almost do it in your sleep before beginning to add contracts. Now, you know, there's different ways to do trade sizing, and we don't have time to get into them here, but maybe this is something that we should talk about in group coaching, maybe on Monday, if you remind me, Brett. We'll talk about trade sizing in two different ways. There's different schools of thought as to trade sizing, when you should trade it, when you should size up, when you should size down. Some of them have to do with the amount of risk you have to take on the trade. Some of them have to do with the amount of risk you're comfortable taking. I always think that the biggest jump in risk a trader should take is going from one contract to two contracts, because it doubles your risk. It makes the decision making more difficult. So there's a couple of different ways we can look at that. I'll write it down and we'll try and talk about that a little bit on group coaching on Monday. Hopefully you'll be able to be there. If not, I can always email you the recording of it. But over leveraging before you're ready, or if the risk isn't right, that can be a killer. And you don't want to do that. You had good profits. Don't blow your funded account. I mean, It's not the worst thing that can happen, right? You can always work yourself back into another funded account. But if emotional tilt got you, that happens. And the more risk you have on, the more likely you are to fall into that emotional tilt or that anger or overtrading or whatever it is. So we'll talk about that on Monday in group coaching. I will write it down. And hopefully, Brett, you'll be able to be there to remind me of that. And we'll go over a number of different ways to look at when it's time to add leverage to your strategy. All right? I think a lot of traders add leverage way too quickly. My opinion. Just me. Let's take a look at the charts. It's going to be, as always, an interesting and challenging day. So we're going to start here with the daily and the S&Ps. I like to start here because it gives me the bigger picture. In the longer time frame, we're basically range bound. Low, high, low, high, low, high. In the medium time frame, we still, I believe, are holding upside structure. We're still kind of rangy-ish bound here, but we've got a little bit of a change in that. We're starting to see lower highs and lower lows in the shorter time frame. This is a kind of a new market state for us. If it continues to the downside, that may change our medium time frame market state at some point. If you remember on the profile or on the prep, I believe yesterday, or on one of the shorts that I did, I called the attempt at the upside move on Tuesday feeble, and I gave it a D. The upside auction was performing less than average. So we get the pullback yesterday. We have overnight inventory that's short. It takes us back to range bound for very unconfident days in a row here. So what happened yesterday? Well, we lost open interest. That means that there were, on that up move yesterday, there was no new business buying into this little dip here. It was more short covering. Well, short covering means that those are buyers, they're initiative buyers that have to buy if they're going to cover their positions, if they're going to offset their positions. It takes buying power away from the marketplace. Now we've got some earnings issues. We've got some more uncertainties as far as the economy is concerned, and the market is already primed to head lower. Now we've got a couple of decisions to make here. We maintained volume in New York. The volume has been 3.5 billion shares traded for the last 6-7 trading days. It's been very even and consistent. Losing that open interest yesterday is interesting because we had a big up day. So for 2 days in a row, when we think about where the market has given us the best opportunities, it's been when the market has opened away from the settlement price. Let's say we opened away from settlement the other day. We broke. We tried to rally. This was the day that I said that the auction to the upside was really less than average. It was a D. It was doing very poorly on this upside move. Well, of course, overnight inventory the next day tried to make a liar out of me, and then we have this big up day. But we lost open interest. We didn't bring in new buyers. We took out old sellers. We took care of old business. We're looking for new business in any direction that we are seeing the market attempting to go. So now we've got overnight inventory to the short side. So 2 days in a row, overnight inventory provided our best opportunities. I'm not expecting that necessarily today. It is of course a distinct possibility, but we are opening with lower highs now, lower lows, another lower low here. If this continues, then we're going to be looking for opportunities to sell strength. We took buying power out of the market yesterday. We're putting in lower highs. We're putting in lower lows, new uncertainties. We're opening with a gap. We're opening outside of the range and value from yesterday. If we cannot close this gap relatively early, then we're going to be looking for opportunities to see this market possibly continue lower, right? What's the first thing that the market did when it opened in the last 2 days? Close the gap. Opened, close the gap. We don't do that today. It's going to be a little change in the pattern. What doesn't happen can be as important as what does. If we do come back, close the gap, show signs of acceptance in range, or even more importantly, signs of acceptance in value from yesterday, that changes things. Possibly. All right. Take a look at the TPO chart here. P shape, somewhat of a normal variation, extreme day. This is not here. This is actually up here. Let me F-bomb this. Sometimes the volume profile does not present as accurately as it should. So there's the volume point of control. There's the TPO point of control. So a normal variation extreme day, P-shape, short covering profile supported by a loss in open interest. There you go. What are we looking at below? Well, we've got this point of control. We've got another point of control down here. We've got another one down here that's pretty much the weekly kickoff low. That's a major market state break. Don't expect that to happen today, but hey, we never know, right? ACH, anything can happen. So we had excess on the high here. We had excess on the high here. The only caveat to that being overnight recent high. It's the only thing that I see hanging above us that could provide a visual magnet. Double distribution trend day to the downside in the overnight. The IB was neither the high nor the low yesterday. What is going on here? Where is that? Is that here? There it is. So kind of low, excess low. We're going to be open below it. No gap close. Look to go to the downside. The market is peering into the dark side. Luke, I am your father. It's kind of funny. My son's name is Luke. All right, crude oil. Yesterday, we drop open interest. Excuse me. 17,000 contracts. Long liquidation. We close, I believe, below weekly kickoff low. Weekly kickoff low, 79.50. We closed at 79.24. We're seeing continuation to the downside now. Some questionable, thoughts about possible recession coming here later on in the year. So that's got everybody thinking, that may cut into demand. We got a long way to go still before we close this gap, but we are in that space now. Again, losing 17,000 in open interest yesterday. This is, a potential state change from range bound to a new continuation to the downside. So when we're range bound, we fade extremes. When we find acceptance outside of balance, we go with it, which would have us at this point looking for more shorts. But what does it look like on the 30-minute chart? It's just opened. Overnight inventory was short yesterday. We liquidated a whole bunch of contracts. We've got overnight inventory short again today. Are we getting too short in a short time frame? Again, gap rules. If we can't close the gap relatively early, we are going to be looking for continuation to the downside. We need new business now. We took care of a bunch of old business yesterday. In order for this market to continue to push to the downside, we're going to need new business, new sellers. There's plenty of visuals down below in naked points of control for us to go target. There's a 1 tick gap left here. And look at the high from yesterday. Very weak high. Not only the fact that there's 3 across at the top here, a triple top, some people would call that, it's exact to 1 tick to the previous day's low. Almost looks like it's 2/3 of an actual profile. It just didn't get up there. What doesn't happen can be as important as what does. So we've opened with a gap. And again, if we can't close the gap relatively early, I know that it's painful to say, it's painful to hear, and sometimes painful to try and catch. But, if we don't close the gap, then there's only one thing for us to do, and that's range here or continue to the downside. You guys probably don't like to hear that, but, that P-shaped profile from yesterday and the loss of open interest indicates short covering, which takes buying power away from the market. Buying power away from the market. It's been 2 days now. Well, yesterday we didn't adjust overnight inventory, maybe a little bit, but we didn't do much. Today, are we going to adjust overnight inventory is really the question. Monitor for continuation. If we see delta positive against direction, that means that there may actually be new sellers, new business, longer time frame traders in the market. What are we seeing here? Hang on. We're seeing 350 positive delta. So no divergence here just yet. Here's that TPO chart. Maybe a little divergence. I mean, we're at the low here and delta's positive. That could be a little bit of a hint. What about the NASDAQ? All you NASDAQ traders, NASDAQ gives me heart palpitations. Wanted, a gap, is any time that there is space, untraded price between regular trading hour ranges. NASDAQ. Long time frame changing, possibly. Medium time frame, definitely higher. Short time frame, balance. Market, NASDAQ, holding balance much better than the S&Ps. Volume maintains yesterday. We actually added open interest yesterday in the NASDAQ, but again, very unconfident up here. Very unconfident. What direction did the market add positions? Well, long. The market moved higher yesterday and added open interest, so it's looking like we added new longs. But again, we're putting in lower highs and lower lows in short time frame here. We've got a gap. We've got overnight inventory short. Overnight inventory was too long here. It came back. Overnight inventory was too short here. It came back. What are we going to do today? It's going to take new business, new sellers to continue to pay all of those overnight shorts. If they're not getting paid, they'll bail. They could close the gap relatively quickly here in the NASDAQ, much more so than in the S&Ps. Jason, what clue does adding open interest give? Well, it tells me and can tell you when there's an accumulation or a liquidation. One of my most recent kind of best uses of open interest was here. This was a Monday. And this was bringing in open interest, adding open interest, adding open interest. And on this day, we continued to push higher, but we lost open interest on that day. It tells me that the upside auction is tiring. They said that day. Well, that the next morning, I said, we lost open interest yesterday. Look for a pullback or a consolidation to begin. It's all about context, my good friend, all about context. What about gold? What's happening? Well, it seems to be finding balance. The medium time frame upside market broke this week, early this week. So now it's just kind of finding balance. Instead of a direct move in the opposite direction, it's found balance. Well, that's okay. Yesterday's move down to weekly kickoff low and the rally off of that level was a wonderful opportunity. So those shorts at the low got really squeezed yesterday. So we do have a market state break, but what is it doing? It is idling. Our auctioneer is pandering. He's trying to make it go one way or another, but he's not doing it very successful. So in this area of balance, we're going to be using balance rules. Here's the 30-minute chart. So this was one of the bigger reactions I saw to the Philly Fed and jobless claims this morning was this pop to the upside in gold. But I'm looking at this as the upper extreme of balance. I'm looking at really weekly kickoff low here as the lower extreme of balance. Anything in the middle I'm thinking is short time frame control. So I'll be focused up here for opportunities, or I'll be focused down here in this area for opportunities. Longer time frame opportunities, that is. We opened with a gap, as far as I can tell, and we're driving away from range and value from yesterday so far. I don't want to step in front of this, but if I get an opportunity, maybe we set up some sort of daytime frame structure up here that I can lean on to limit risk, something I would consider. This pop off, this weekly kickoff low yesterday was delicious, though. Delicious. TPO. So yeah, looks like we do have a gap. P-shaped profile, losing open interest. This was short covering. This was not new buying coming in down there. This is a little bit unnerving for longs here. If this was new buying coming in, we added a whole bunch of open interest on this day, I would be much more comfortable holding on to longs. But we lost open interest. That was liquidation. That was short covering. So no new business down there just yet. These weekly kickoff levels are areas that I believe longer time frame traders will be forced to really adjust inventory, and sometimes they work wonderfully. Sometimes, they become magnetic and they become a pain in the butt. But they always give us the opportunity to limit risk. So yesterday, P-shaped profile, IB low, yes. P-shape, loss of open interest, short covering. They got us all too short in the hole down here yesterday in gold. What about the euro? Longs have been really trying to hang tough on this trend line here. We haven't had a close below it yet. Now it just seems to be kind of pushing through attrition because we're kind of range bound here. But again, no close below that trend line yet. Here's the 30. Range, lower extreme, upper extreme. Gives us opportunity to limit risk. And if we break out and accept, you go with it. We break out and accept, we go with it. It's a pretty jumpy day here. Of course, the dollar's been swinging around. So what are we doing? Well, we've got an outside day and overnight, overlapping the higher to the upside here. There's certainly some visuals and some possible repair due up here, but this area, our current high, looks kind of interesting. I'm using that as a somewhat pivotal area because it's the upper extreme of the 3-day balance that we're in. We added 1,600 in open interest yesterday, but no real directional activity, no real direction detected. It was a very wide profile, centrally located, normal variation, neutral day, Neutral day, we're still in it. Be patient. Here's the TPO chart. Oh, I got the TPO. What am I doing? Yeah, I don't even know what I'm looking at half the time. So these points of control, these wide points of control have already been checked. Range bound, we were just up here, the upper extreme. We're seeing the market come back towards, at the very least, point of control. What about the 10-year? No change in open interest yesterday. Interesting. There was actually, I believe, a close one full tick below weekly kickoff low. Our overnight low at weekly kickoff low. Finding buyers, or at least running out of sellers down there. I mean, the overnight low was there to the tick. Here's the 30. So resistant below weekly kickoff low, closing below it, just barely. Opening today with a gap and then seeing continuation above. There was a tiny little gap right up here that we just filled. There's still a naked point of control above. And then there's a little bit of space. Here's the TPO chart. Yesterday's profile, normal variation, no extreme on either side, no excess on either side. Relatively even bell curve. Makes sense that price is seeking new areas to facilitate trade. So here's our gap. Here's that previous gap, one half a tick. Checked. And then we'll take a quick look here at the natural gas. Lost 19,000 in open interest overall, but 23,000 of that was the May contract. So in essence, during rollover, open interest gets very blurry, but you could say that we added open interest on a push back down below this weekly kickoff high. New sellers happened in the overnight mostly and just held here. Typical probably for rollover. No real overnight inventory, nothing really to write home about here. We'll see what happens. Oh, I forgot to tell you one thing about the 10-year. Oh no, I did that, didn't I? Son of a... So there's a gap from here to here. There is also a gap from here to here. This could end up being an island bottom. Range, gap to this, gap away from it, island bottom, reversal pattern, reversal pattern. So there's that. Alrighty. Hang on. Okay. So be ready for Make Hogue Money as soon as I can get it together. If I don't see you, don't forget about the Q&A session with Dan and Michael Patak at 3 o'clock today. Looking forward to seeing everybody there. And if we don't see you there, well, I hope you have a great trading day anyway. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Be kind to yourself and others. Say a prayer for peace. We'll see you in a little bit.